Look guys, I just made 30K in March trading while every single person in my DMs and social media was asking me, Sean, should I still trade in a bear market or should I sit out? Well, the answer is you need to adapt to different markets. Every single market is going to give you a different opportunity and it's going to be either very good for you or very bad for you. Some traders are great at trading bull markets and some are great at trading bear markets. It's all about knowing where you have the strength and sitting out when you're weaker, right? So you also want to learn how to adapt to these certain situations. And when the markets become weaker, you need to see what is working in the markets and attack that until it stops to work. So for example, in 2024, buying every single dip worked absolutely phenomenally. So you were just looking to buy every single 50 EMA, 80 EMA, 21 EMA test, and you would got absolutely paid for that. Now in 2025, if you would have done that, you would have got absolutely destroyed. So understanding where the markets shift and adapting with the markets is the best way to go about this. While most traders are panicking about conditions, they're looking for the next Trump tweet, they're looking for Powell to speak, or they're looking for the next headline or whatever it is. The best traders are looking for these opportunities within the headlines, right? So as we get these headlines, we're looking for these big trades. Volatility in the markets create really good opportunities. And there's a good time to risk when things are moving, because think about it. The risk to reward when stocks are moving a lot is much higher when things are choppy. When things are choppy, there's not really movement that you can make money in, specifically as an options trader. The best conditions are when things are moving a lot because we're able to use a small amount of money to risk small and make absolutely insane returns. Trading isn't about being right every single time. It's about having a plan and sticking to it. And if you can adapt to the market conditions, your plan can still carry you through harder conditions to trade. It all just depends on your strategy and the plan that you have as a trader. While my feed was filled with people complaining about uncertain markets, I was able to just take out all the noise, watch price, and use my strategy to be able to make $30,000 just this month, even in a harder and more volatile market, just by blocking out all the noise. And this is super important. Too many people are looking at what other people think, right? What does it matter? Look at what price is telling you and then use that to trade your plan. Today, I'm going to be breaking down my exact approach on how to be trading during bear markets, how to size down when you know things aren't working and be defensive, and when to get aggressive on the right setups, and how to spot the sectors that are actually very strong and very weak so we can stay within the trend and then play the big momentum, because that is where the most money is made. The highest probabilities are going to be when things are moving to the upside, but strategies do work during bearish markets as well. Because as an options trader, I can make money when the market goes down, as well as when the market is in a huge bull market, because you can bet on different sides. Let me show you guys exactly how I'm able to do this. The real reason most traders fail in a bear market is not what you think. When I went through my first bear market, I made literally every single mistake in the book. I try to buy every single dip. I try to time the bottoms, catch falling knives, over trading out of desperation, trying to make back all the money I lost, but this is not the right way to do it. All this is going to do is blow up your account. But by my third bear market, everything changed because I started to realize what the right way to trade in these type of markets was. And the reason why I was able to do this was through all the experience of going through these different type of markets and understanding that markets do shift. There are different cycles and we have to adapt to these different cycles, or all we're going to be doing is just being stuck in this cycle of losing money over and over again. This is the reality nobody wants to accept. You don't need to be trading every single day, and this is where everything changes. Once you stop looking for trades and you just let the trades come to you, you set up a plan over the week or, the night before, the morning before. This is where your plan is going to be the strongest, because all you have to do from here is just execute. You don't have to be searching for these trades. You know exactly the trades that you need to be taking, and everything is pre-planned. And in fact, high quality setups become even more rare, and it's so much easier to identify them because of how rare they are. So imagine if you see a really good setup in the market and there hasn't been good setups in like months. It's so much easier to execute on it, and you should have way more conviction when it comes down to the time of execution. The highest probabilities are still going to be when things are moving to the upside to make money, but strategies do still work during bearish markets as well. And most gurus won't tell you this because it doesn't sell their course, right? They're all saying market just continues to go up. They need you to believing you can make money every single day in any condition. That's obviously bullshit, and deep down you know it. Before I show you this trade, let's understand what was happening in the markets. So the markets were actually in a big downside trend. And the reason we know that is because we were below the 8, 21, and 50 moving averages, meaning the markets are downtrending. These moving averages basically give us an idea of what the trend is. Anytime we're above the moving averages like so, we have a strong uptrend, and then below, we're in a strong downtrend. So knowing that, what are we going to look for in the markets? Well, it's pretty simple. You want to look for the markets to move to the downside, because if you're in a strong downtrend, the markets are probably going to continue to follow that trend. So the highest probability trades are going to be to the downside. So too many traders will try to catch the bottom here, trade it the other way. For me, the moment I see the markets break a key level with a ton of volume like we saw on this day right here, I know the next few days are going to be strong continuation days to the downside. So how do we take advantage of this? Well, if we know there's going to be strong continuation to the downside and the markets are in a very, very strong momentum move, we want to look for a continuation play. So now what I'm looking for is a setup that is just now breaking out of a tight base. Now, this is the trade setup that I took on the ticker Adobe. The setup was a big descending triangle that just broke out of these lows right here on a ton of volume. And you could see this stock ended up gapping down. It was in a strong downtrend already, while obviously the rest of the market was downtrending as well. So we were trading within the trend. We had a big gap down, so a post-earnings gap down, which usually sets up for a power move to the downside. And then we broke under these big lows where price continued to hold. You could see every single time we tested those lows, price was holding up. So now that we broke those lows, we know we're going to get a big continuation to the downside, specifically because there's a ton of volume within that move as well. So then you're going to see a big continuation move. And you could see right here on this day, we end up breaking below these lows, and then we continue to get a huge sell-off to the downside, catching an almost 20-point move or a 5% move to the downside with puts, which lead to almost a 200% return in just one day. Now, here's where most traders mess up. They'll see a chart like this, and then they'll just randomly take an entry without even knowing where to enter, what the risk reward is, and where to put their stop loss, where to put their targets. These are all things we need to know. At the end of the day, trading is not about being right on every single trade. It's about having a strong plan with high probabilities and taking the least amount of risk possible for the biggest amount of reward. So you could see the setup right here that I was looking at was this descending triangle. Now I need to find a trigger level. I need to know where I'm going to be entering, or else I don't know where the highest probability entry is. So once I see the stock breaking this low right here, getting below that spot, I see it set up into the end of the day. So now we can go down into the smaller time frames and start seeing that smaller time frame setup that is setting up. That is going to be another descending triangle that is setting up. So you could see the highs continue to reject, prices continue to reject near the highs, and then it breaks under this low right here with a ton of volume. So it's literally a smaller setup of this big daily setup that was forming into the end of the day. The stock is breaking down on the daily time frame, and it's also in a big downside continuation on the smaller time frame. So as we break these lows right here, I enter the trade, and you could see a ton of volume comes in. This is the most important part, and this is how you confirm your entries. You wait for volume on the break of the key level that you're looking to trade. So you can see right here, this is my key level. Why? Because every single time it bounced here, we got a pretty nice move to the upside. But once we broke below, that is where the big move was initiated. So that is the level we are going to be looking to trade. As price breaks under, we get a big move to the downside. So if our entry is right here at the lows, now we need to figure out where is a good stop loss. We don't want to take too much risk and risk all the way up into these highs. So we need to find something that makes sense. For me, if I'm looking to trade a tight pattern, what I'm looking for if I'm taking puts is the most previous high that was made. So either this high right here or this high right here could be used as a stop loss. Obviously, this high right here is going to be more important because it is the high of the day, but this high right here should hold as long as this pattern holds, right? If this is going to move lower, there's no reason that this high should break, because if it breaks, this just means that now it's setting up to reverse the other way. So now that I know where my level of stop loss is going to be, I'm marking that out on TradingView. I know my entry is going to be right here at these lows. Now I need to find actual targets to make this trade make sense. So what I'm looking for is an over 1 to 5 risk reward. So let's say if I use the short position tool right here, let's say I get in right at that break, my stop loss is going to be at this high right here. My first target needs to be at least a 1 to 5 risk reward, which would mean it needs to be at least down to 360. So what I do now is I go down to the bigger time frames and I go back to previous price action. So we could use a daily for this, or we could use the hourly time frame, and then we want to see if there's any previous price levels that we could target on the chart. So right here, for example, you could see the previous target that I'm looking at would be 345. The reason why that's a target to look at is because that's this big low right here that the stock made, and price was obviously not able to kind of break through that spot, and that's where this big rally also began. So we have these two levels right here that I marked out. I like to usually set out 3 targets for my trades. The first one is going to be right here at 361, and then the next one is going to be right here at 346, and then 332. So now that I have 3 targets, what I could do is as the stock hits these targets on the lower time frames, that is where I'm going to be looking to scale out. So you could see these targets match my 1 to 5 risk reward. If the stock comes all the way down to these lows right here, now it's at a 7 risk reward, which would be absolutely phenomenal, and that's exactly what I look for. And as we hit my targets, that is where I'm looking to trim out of the position. So every time we hit a target, trim some. Every time we hit a target, trim some, and then you're taking off 25% of the position every single trim, and then you're looking to hold the rest to your lower targets for that trade to be able to catch these big winners even in markets like this that are super volatile. This is going to be the super crucial part, sizing your trades correctly in bear markets. If the markets are not in the highest probability state, which bear markets are not for making the biggest gains, I like to size smaller than my usual sizing. So usually I size 5% of my portfolio per trade for the options trade. For bear market trades, when I'm trading in a downside market that is very volatile, I like to trade half of my normal size. So I size in 2.5% of my portfolio per trade in case there is a big gap up or a big gap down in either one of these circumstances, whether I'm long or short, to protect me from that risk of overnight volatility. And then when the markets start trending again to the upside, I usually like to put my risk back up to 5%. When I start noticing a trend is forming and we have very strong momentum in the markets, there's a new theme developing and there is a lot of momentum, I start upping my market size and as well as my account size as well. I like to kind of balance my account size depending on what markets we're in, because you always have to think about it like this. If you are in an easy market, you're going to print a ton of money. So why would you force money into markets that are not going to give you those returns that you usually look for? Instead, we can save a lot of our capital and then inject it back into the markets when the markets are making really, really strong moves and they're easier to capitalize on. The pros made their fortunes by trading less. Think about it like this. They wait for the best setups and their highest convictions. That way, they have the confidence to hold through drawdown, to hold through when the markets, kind of go against them a little bit, but they're able to hold their positions for a long period of time and make big gains on each one of those positions instead of taking a million different trades at different times. There's no point to do that. It's about the quality of the trades over the quantity of the trades always. The trade played out exactly as expected, netting me $3,500. But more importantly than the money, it's about knowing why this trade even worked in the first place and how we can continue to repeat this in a bear market. So the reason why this trade worked out so well is because we're trading the trend, and the whole point of trading is to use the momentum in the markets to set you up for these big trades. If you are trading against the momentum, you're literally missing out on the high probabilities in the market. Think about it like this. If you have to go against the tide, you're not going to be able to swim into the ocean or wherever you want to swim. But if the tide is carrying you out, it's going to be much easier for you to get into these profitable trades and to get out into the oceans if you're swimming into the tide. So you have to understand that you need to be trading with the markets, and the markets are going to give you the momentum that you need to hit big trades like this. So if the markets are in a downtrend, if they're below the moving averages, we want to focus on shorting the weakest stocks in the market. And the reason why this trade worked out so well and why the stock dropped so much is because Adobe has been one of the weakest stocks in the market. You could see for the last 3 or 4 months, it's been going down way before the rest of the markets have. It topped out all the way here in January 2024, while the rest of the markets topped out in January 2025. So for a full year, this stock was already going down. So it was leading the weakness lower, and that is super important. You need to be trading the weakness leaders if you're going to be trading the downside, and you need to be trading the strength leaders if you're going to be trading the upside. It's all about catching where the momentum is in the markets. Now you might be thinking, Sean, this worked for you, but will it work for me? And the answer is 100% yes, but you have to focus on the key principles of trading. The main takeaway is trade with the trend. Do not try to fight the market when it's moving in a direction. Instead, take advantage of the moves that are happening in the market. Don't let your bias put you in a bad position in the markets, because at the end of the day, price is always going to be right, and you are always going to be wrong if price is moving against you, because the truth is, price is the truth. It's always going to be right, and price is going to guide you in the direction that the market wants to go. If price is going down, but you think it's going to go up, it doesn't matter. You're not making money. The goal is to make money within the markets, and we want to follow price. A common mistake a lot of people make is they try to counter trend the trade. They try to catch a falling knife when the market is moving down, and even when the markets are moving up, they're trying to short. But the whole idea is to trade the trend that way. You have high probability. Think about it. If the market has been going down for the last 3 to 4 months or the last 3 to 4 weeks, what is the probability it's going to continue to go down? It's going to be much higher than, let's say, if the markets have been going up for the last 3 or 4 years. The markets are just going to continue to go up, right? So once we break key moving averages, key trend points, this is where the markets are going to start to turn. So we want to trade with the trend of the markets. So what you want to look for is the exponential moving averages. When we break key moving averages and when the market gets below specific points, specifically the 50 weekly EMA, which you could see that tech index has not broken below since 2022. This is where a lot of the shift in momentum is going to occur, because you could see right here, we held in 2023, October 2023, we held here in August 2024, and now we broke it here in March 2025. So you also really need to understand when to size up in the markets and when to size down. For me, when I'm having my best performances is when I like to size up. That way, I'm able to take advantage of when my strategy is working the best in the market. So even if I'm still able to make a good amount of money while the markets are coming down, I still want to size down because this is not the best environment for my strategy, and the highest probabilities are still going to be in strong markets to the upside. However, strategies do work in a bearish market, and you can make money as the market is moving down, which is a very, very common misconception that people have, that think you cannot make money and you should panic, sell everything. That is not the case. You could still trade the market to the downside. You could still trade the trend, and you could still trade things when they're reversing the other way off of key levels. It's all about knowing where the best trades are in the market, having a good plan behind your trades, and being able to catch those high probability and low risk trade ideas. So to answer the question, can I really make money in a bear market? Absolutely. And if anything, sometimes you can make even more depending on your strategy. But you have to understand the right approach. So let me recap what we covered today. You don't need the perfect market conditions to make money. You just need to have the right plan and apply your strategy the correct way. The goal is to always have perfect execution on your best setups, but you don't have to trade every single day. Wait for these setups to form, wait for them to come, and then execute when you see them. You also want to look for relative strength and relative weakness. If there is a sector that is moving up, that is still a sector that is tradable even in a bearish market. And if there's a sector that's been in a super strong downtrend, that is going to be the best leader to the downside and where the best probabilities are to make money shorting stocks in a bear market. Make sure to size appropriately as well. You don't want to be over leveraged in a market that's very volatile, specifically overnight, because even though the probabilities are lower that markets are going to gap up, they're still possible in a bear market, and you don't want to be caught on the other side of that. So you want to be in the markets in smaller size, but we can still be sized, correctly to make enough money. But the goal is to risk a small amount of money to make a big amount of money on the best setups. Make sure that you have clear entries and exits on all your trade. Before getting into the trade, know where your stop loss is going to be, know where your entry is going to be, and know where your targets are going to be. That way, all you have to do is execute, sit back, and let the trade plan play out. Remember, it's not about how many trades you take, it's about the quality of each trade and how good the setup is. The next big market move is always coming no matter what. There's a ton of volatility. There's going to be a ton of big moves for the next 100 years moving forward. What matters the most is your execution and your preparation to be able to execute on amazing opportunities that will come. Because remember, again, when you're trading options, you can make money both sides of the market. Doesn't matter if the market's going up, and it doesn't matter if the markets are going down. There's always opportunity. If you found this breakdown valuable, please like and subscribe for more of these coming every single week. And drop in the comments what specific setups you want me to break down or what other topics you want me to cover.